and welcome to another episode of the Festival of Enterprise COVID-19 webinar series. I'm David Stevenson, your host, and I'm joined this morning by Ninder Johal. Ninder, good morning.
Good morning, and thank you for the patience with the IT.
Yes, apologies, everyone. We had a bit of a technical issue this morning. The internet has been playing up sporadically, as I'm sure you're all aware. Over the last sort of week, there have been sort of weak spots. So we did get there in the end, though, and we are looking forward to hearing Ninder's session this morning. He is the non-executive director of BCRS Business Loans and deputy lieutenant for the West Midlands. And today he will be talking about the newly initiated bounce back loan scheme, everything you need to know, and of course any other questions that you would like to ask him, you're able to do so as well. So I will pass it over to Ninder, who will take us through some information, and then at the end we'll open it up to Q&A. So Ninder, thank you so much.
Thank you. Well, look, we just need to go back to sort of mid-March, and we saw overnight a collapse as the government told us to shut everything down. What that meant then was that a lot of businesses, suddenly their cash flow disappeared, and the threat then of laying everybody off prompted the government to move very quickly, and I think they've done a fantastic job in the way they've worked. And so one of the questions they had to ask themselves is, how do we get liquidity? How do we get cash into the businesses? So they launched something called CBILS. So in order to be eligible for CBILS, you need to show your bank that you are now starved of cash because of the crisis. In other words, you weren't in trouble before the crisis, but you are now in trouble because of the crisis. So the bank set about getting through the applications, and the due diligence was quite strict because the government said we will only cover 80% of the loans. So if anybody defaults, you as a bank are going to have to pick up the tab for 20%. That meant that the banks were going to be as cautious as they've always been in lending money out, because in order to get that 20% in the event of a default, in order to get that 20%, they'd have to show the government that they'd done their due diligence. So they were being quite strict. So what the government discovered was that whilst there was a deluge of applications, actually there were very few getting through the door. So a lot of lobbying from organizations saying, well, the micro businesses, the small businesses who don't have that kind of paperwork available, who can't wait that long, we need to do something for them. So they introduced on Monday, 2 days ago, the bounce back loans. And the features of the bank loans are that they don't need as much due diligence, so they're not asking as many questions as they would for the CBILS. You could borrow from 2,000 to 50,000 or 25% of your turnover, whichever is the greater. So it's either 50 grand or 25% of your turnover. So if your turnover is 100,000, you're only allowed to borrow 25,000, which is your 25%. A bit like the CBILS, there's no interest to pay in the first year. So you have a holiday of a year where you have no repayments to make. That allows you to get your business back on. Typically, when you borrow from the bank, there's an admin fee for doing all of this, while the government will also pay for your admin fee, both for CBILS and for the bounce back loans. There are no personal guarantees. So your house is fine, and your other assets that you may have are also fine. But, and here's the but, a lot of people are misled when they hear the word guarantee. The guarantee is for the bank, not for you as an individual or your limited company. You are still liable for the full amount of money that's due to be paid. It is self-certified, but if you default, the bank will come after you as they would do otherwise, because they will need to show the government that we took every step to recover our money. So how has it gone? We're hearing mixed things. We're hearing people like Lloyd's were very quick. We've heard other banks are struggling. I spoke to somebody from NatWest. They received 50,000 applications in the first hour. Now, so just imagine if you're running a business and suddenly you're getting that many applications coming. So the banks are not going to be able to turn it around that quick. They're still going to have to go through the paperwork. And somebody I know in NatWest said they were moved from what he normally does, and he's not normally a customer-facing person. Now suddenly he's been shifted into this place to try and get these applications through. So I think there will be variability between each bank on how well they're resourced, on how many applications they've had. Other things people need to remember is you have 6 months to apply for this. So from today, and I think it's November, you only have that 6-month window. After those 6 months, the scheme is gone, which means you need to make a decision as to whether you need the money today, or could you maybe get it 5 months down the road and then make use of the 1 year of free interest, and then you got another further 5 years. So I think timing is important for you. Borrow if you need it. Borrow when you need it, because you are going to have to pay back. You are going to have to pay back. If you need more than 50,000, then I think you need to go to CBILS, but be prepared for CBILS that they will then drill into your numbers. And the question they'll ask is, can you afford to pay it back? Whereas with the BBL, there is no question about can you afford it to pay back. They're trusting you to be able to pay it back, and they're relying on your self-certification to say yes. Now, the question is, do I need the money? Depends on where you are in your sector. So if you are in the sector which is the last to open, like a restaurant, I suspect you'll need it at some point. I've just seen a question, something about which banks. Well, at the moment, there's only a list of the main high street banks that are letting this money out. And I was speaking to a friend of mine in NatWest, and I said, well, if somebody's not a customer of yours, what do they do there? Because some of the newer banks haven't been given the permission to release this money. So the banks will take you on. You'll have to open an account with them, but they're going to look after their customers first. They'll do them first, and then they'll look after you. So you'll have to apply as a new customer, as a new business with them. Then they'll do the paperwork, and it will take much longer than if you're an existing customer. So really, you should be going to your existing bank, and if you're with one of these new startup banks who aren't part of the scheme, you are now going to have to go to one of the main banks. And why they pick the main banks? Because they have the network, the coverage, and the scale to get these things through. And they're hoping, once it settles down, you should be getting money in a few days. I don't know if that sort of answers the basic questions.
Sure. I mean, I think some, Ninder, if I'm correct in saying, some of the sort of new fintechs are part of the scheme. I think Starling Bank is part of the CBILS and the BBL scheme.
I'm not sure they're part of. Somebody was saying yesterday, I think they're being introduced to it. I mean, what's interesting about some of the newer banks, and some of the fintechs, I mean, some of them aren't making money themselves; they're loss-making themselves. And if you think about the CBILS, one of the stipulations behind the CBILS is that if you're loss-making, there's no point applying. Sure. Because you were probably losing money before the coronavirus kicked in. So it's interesting that will the government not allow you to borrow money if you're loss making, but will they give money to a challenger bank who is loss making themselves? So interesting conundrum for the bank for the government to resolve. But not everybody's in the system.
Sure. I mean, a couple of sort of observations on this bounce back scheme, because obviously it's quite new and people are sort of unclear. I mean, effectively, if they're capping it at 25% of turnover or 50,000, I mean, in fact, let's assume that 25% number is correct. I mean, if you're a business turning over, I mean, effectively that's, capping it for businesses under 200,000 in turnover, implicitly. Yeah. In a business of this scale, the profit margins are going to be, not extravagant by any means. So effectively, if it's effectively a 3 to 4 month bridge loan, by implication, if they were giving you a maximum of 25% of turnover, the implication is that they see this crisis ending in 3 months or normal trading period resuming in 3 months. What do you think?
Okay, so a couple of things then. If you need more than those 3-4 months, if you're looking more than a bridging loan, you should be going to CBILS. You should be going to CBILS and saying, listen, I need a lot more money that will carry me, not just to the 3 months, because I'm no magician, but I can't predict it's going to be over in 3 months. And I think as a business owner, you'd be foolish to think that everything's going to get sorted in 3 months. So I would do, and you can't spend too much time on it because it's such a fast moving environment, but I would do a number of scenarios. So my business is doing events. So I do big 500, 600, 700 people events, black tie events for entrepreneurs. Now, I know the moment it struck the shutdown, I opened my spreadsheets and I put zeros in the income side for my events side. From March all the way to December, I put zeros. Straight away, I put zeros. I then scrolled down and looked at my expenditure. Then I looked at what point would my bank balance go to zero, and typically I would then go into an overdraft. Trouble with the overdraft is, you don't know how long that's going to last now. Are we going to be in business in large events by February? I have no idea. I think we will, but I have no idea. My proxy will be the Premier League. The moment the football starts to open up and crowds are going in, I know that's the time for me to do big events. So I now need to think the worst case scenario. So I need to say to myself, example, those zeros don't finish in December, but potentially could finish December 21. Let's say worst case scenario. So I go all the way to December 21. I scroll down and look at my net cash flow. That number is what I should be looking at. If that is beyond 25% of your turnover, if that is a big number, you need to look at CBILS. Then you need to say, and because remember, in a year, you can pay this back within a year without having no interest, and there's no admin fees. So actually, you haven't lost any money. If things are positive and you get out quick and you haven't used that money, pay it back. But I think it's a bit like a startup. So, you know, when you start up, you think first couple of years, hardly little money coming in, expenses will be high, and you borrow on that respect. The difference between a startup and today's, you're a startup with a brand. People know who you are the moment you start to operate. So your income will be better than it would be for a normal startup. So I think that's what you have to look at. And remember, you're paying 2.5% after the first year's over. You are only paying 2.5%. That's, in all interest, that's quite cheap money. That is quite cheap money. But you need to borrow if you need it. If you don't need it, don't borrow it. But some people, so some of the bigger organizations, I'm talking about the real big ones, who have facilities with their banks, have pulled the money down and said, we'd rather have the money with us today than say in 12 months, the credit markets tighten, the banks retrench, nobody wants to borrow any money. But as you have the money now, you've drawn it down, you've got it for a year. If you don't need it, pay it back. If you need it, at least you've got it.
That does bring up another interesting question. So the government is paying the interest for the first year.
That's right.
And are there any principal repayments due during that period, or is it
no payments?
No payments at all.
No admin fees. Once your 12 months are up, you start to pay back the money you borrowed, but at 2.5%, and that really is a low percentage rate. Look, you can see the logic behind it. The government has two options. It either withdraws and lets everybody fold, and you can imagine then the amount of bankruptcies, you can imagine the amount of people that will then be unemployed. And I don't know about you, David, but sometimes when you get into recession, it can take years to get a job. It could take you years to get a job. Could you imagine the kind of society we will have if we have mass unemployment and all the implications that go with it? And in fact, all the costs that go with a society that's all unemployed. And we've seen it around the world, what it does to society. So a government has to weigh that up and say, well, what are the costs of throwing money straight into the businesses, inject the money in, or do we hold back and then have to pay potentially 5, 6, 7 years the cost of a deep recession? And that's where I think the government decided CBILS was good, but it wasn't quick enough and it wasn't getting to the micro businesses, and the paperwork wasn't right. There was too much due diligence. The banks were being reticent for the right reasons. They're being risk averse. Let's get this BBL in. And I suppose the question will be, what happens beyond that? And how long do we think this lasts? The fact that they've given it 5 years or 6 years over the term means they think in their minds we'll be up and running within 2 to 3 years, 4 years, we'll be back to where we are now. And hopefully people will be generating enough cash to pay it back.
Sure. So, I mean, it's businesses are faced with difficult decisions now. Obviously, yes, the CBILS scheme was difficult to access. Do you know if the BBL scheme is being dispersed at a more quicker pace? I mean, are people getting?
I've heard cases of Lloyd's. Somebody put an application in Monday, anecdotal, and they received a check on Tuesday.
Okay.
I think the Barclays platform crashed, is what I heard, but it might be back up again. And NatWest had been particularly prolific on CBILS. They've been quite good at getting through CBILS. So I think it's variable between the banks. Today's Wednesday, 48 hours, and they've used the word in their marketing, days. So if the money hasn't come out by Friday, I think then we can start to ask serious questions, because then you're going into weeks. But this was really produced to get the money into the businesses, so they hopefully don't lay people off, and we don't have an impending unemployment problem.
Yes, so hopefully that is the case. I mean, it's given that it's capped at 25% of turnover, it still will have businesses facing difficult decisions. People will still need to be very conscious of their costs.
But again, but David, if it's much more than 25% of the turnover, they should be going to CBILS.
Sure.
They should be, and they should have had a conversation with their bank by now. This is pitched purely at micro level, purely at those employing 1 to 9 people. This is purely a specific product for them, and my understanding, and I can see why, those type of businesses 1 to 9 don't have budgetary procedures in place. They don't have financial controllers. They're not able to forecast 6, 9, 12 months in time in front of them. And generally, they don't have something called reserves, in other words, money put aside. And quite a few of them are hand to mouth. So for them, timing is essential. They need the money today. And I think it's great for them. But what you can't do is have a CBILS and this, so it's one or the other. And I think if you think 25% of your turnover, which is capped at 50, if you think 50K is not enough, I think you should be looking at CBILS, and you should have already had a conversation with your bank as to where you are with CBILS, because obviously with the great amount of money comes greater due diligence and greater risk assessment, and one assumes you're a bigger business with more of a formal procedures in place and with a better forecasting financially as to what your requirements are. That would be my guess.
So you can't if you do apply for the bounce back loan, it negates you from being able to apply for the CBILS.
Yeah, if you've got a CBIL loan for less than 50, you could say to your bank, can you change that to a BBL? Okay. Yeah, you could go that way. What you can't do is be applying for that and applying for this. They won't allow it. You've got to have one or the other, and you can't have both. Okay,
thank you. Ninder, we have some questions starting to come through. We have a question from Derek, who runs a small not-for-profit charitable company. They've been with their bank for 11 years. The bank is not part of CBILS or bounce-back loans. They won't offer a loan unless it's linked to a property asset. The trade relies on summer events, so they're desperate for a small loan to see them through to the summer of 2021, and they're wondering what your advice would be.
I think you go to one of the major banks. Now, what they will do, and you're going to have to now be prepared for a wait. So one of the problems with the new fintech banks or the new banks is they don't have the coverage, or they don't have the legacy or the history for these kind of products. This is also brand new to everybody. So I think, I mean, if you go onto HSBC example website, they will encourage you to open an account with them. If you go to NatWest, they will say, come on and open an account with us. If it's 50,000 and you could self-certify, I think you'll get it. You just have to wait. If it's beyond 50,000 and we're going into the CBILS territory, then be prepared for a longer wait, but expect more probity and expect a better set of numbers that you'll need to produce to show affordability, the fact that you can afford to pay back. You don't have the affordability criteria. I've seen the form. It doesn't ask those type of questions. But unfortunately, they decided that the quickest way to get this money, because remember, it's all done in a number of days, really. The government came up with this scheme in a number of days, and you can imagine then they sat the banks around and said, well, this is how we do it. The bank said, no. So there must have been a lot of negotiation taking place. Once that's done, then the banks have to get their staff trained up so they're ready to do something. It's all done very, very quickly. So what the government would do is they said, right, we have a relationship with the major banks. They did the CBILS with us. Let's get through them first. Then my guess would be the one second tier, third tier, fourth tier, then they'll start to come on board later. But they probably thought the quickest way was, let's get it through a network. Our best network is the clearing banks, the 4, 5, 6 big ones. Let's get it through them, because we know if we get it through them, we've targeted most of the micros, not all, but most of the micros will have an account with one of the major 4. So you can see it's speed and access and get the money into the marketplace as quick as possible. You're not going to cover everybody, but you're going to cover most.
Yeah, fair enough. Thanks, Ninder. I think you just really answered Harmesh's question about if your bank is not in the scheme. Yes, banks are taking longer to open new accounts. If you bank with a bank that isn't part of one of the accredited lenders, you likely will have to go to one of the accredited lenders and open a new account, and it will be a time-consuming process. You have to factor that into your cash flow forecast or cash expenditure forecasting. Most people don't have much cash flow coming in at the moment.
And of course, nobody knew this. So when you open an account with a challenger bank, and nobody saw this coming. So it's not anybody's fault. It's just the way things have panned out. And you can see the logic from the government. What's the quickest route to get the money out? We'll focus first on the big boys, the boys who've got the network right across the country and are the ones who do a lot of work with micros.
John is asking whether there are covenants with bounce backs.
There is, you've got to give no PGs as long as you can pay back at the end of the period that you pay. There is nothing else they're interested in. It's self-certification. They're assuming, they're trusting you that you'll be able to pay back. And that's all that's involved. CBILS, there'll be lots of conditions, although your house can't be as a personal guarantee, up to 250 if I recall. But with the BBL, there is nothing that they will ask you, nothing. It's a simple one-page form. They'll ask for your turnover, and they'll ask for the amount you want, and they'll assume you're telling the truth.
Obviously that assumes that people are able to gauge when they're going to be able to return to trading, which of course is difficult as well. So it does put people in a sort of tricky position, because of course we don't know when this is going to end. So it's I sympathize with everyone. It's a very difficult position that everyone is in. Jazz is asking what the rate is on the bounce back loans. It's 2.5% fixed.
2.5% fixed. So I did ask the question, with some loans, they're variable. I'm going pre-COVID. So if you said you paid a bank 3.5% plus base rate variable, then as the base rate goes up, then your payments would go up. They're not fixed. But in this instance, 2.5 fixed, irrespective of what's with the base rate. And my guess is they've done that because they know there is no way over the next 2-3 years are you going to see the interest rates fly through the roof. There is just absolutely, it's at 0.1% at the moment. It's not gonna fly. So I think they're pretty well worked it out. Interest rates will remain low for the next 3-4 years as they try to stimulate the economy. Therefore, we'll just fix it at 2.5%.
Thank you, Ninder. So there are more questions about the criteria. So it sounds as though there aren't a lot of criteria for bounce backs. It's all self-certification. We have a question here. It seems like there's the perception that there are 7 questions banks will ask for bounce back loans. Are you aware of that?
Yeah, there's a number of questions. There is a number of pretty straightforward questions. They're trusting you. There is a little clause at the end which says, I filled this in because I've understood it and I'm telling you the truth. And if later on they find out you haven't, then they're going to come after you and say, well, this is what you claimed in your self-certification. So I would say to anyone, be sure you read it as you go along. Make sure your figures are accurate, because in the event of a default, only in the event of a default, nobody's going to say anything if you keep paying. And at the end of the 6 years you've paid it, nobody cares. But in the event of a default, it's a bit like an insurance scheme. When you take an insurance out in your house and you tell them, actually, I have 7 bedrooms and you only have 5 or whatever it is, and then you make a claim, they're not going to pay out. So I think just as long as you understand the questions aren't onerous, they're pretty straightforward. They're asking for you to certify your own turnover. They're asking you to tell them how much you want. They haven't asked whether you can afford it, and they're just assuming that you're going to tell them the truth.
Okay, so it sounds as though the criteria have been relaxed quite significantly from the CBILS to the BBL. It'll be interesting to see what people's success rate is. It sounds as though you had someone who was successful quite quickly. We're getting a couple of comments here that the Barclays site has been very difficult to use and has been struggling under the volume. This is an interesting question from Graham, and I think the answer is yes, but he's asking, if you get a bounce back loan, will it be paid directly into your account?
Yes. Because in the form, they ask for your sort code and they ask for your account number. So it will go straight into your account, because they specifically ask that for you to punch it in.
Okay. So we are getting another question here about, whether you need to be registered with HMRC. Yes, I mean, I think you would need to be, in terms of a business to apply. I mean, is this open to sole traders or is it only open to limited companies?
Everybody.
Everyone.
Because remember, most micros are either sole traders, small partnerships, or small limited companies.
Okay.
So you have to have a business. Somebody needs to know you have a business. You can't just make one up. And again, if you haven't been running one, I don't know where the figures are going to come from to show. And I did ask a question that, is it possible that you could potentially approach 3 banks with the same stuff? But no, it's all centrally controlled. Just like with CBILS, you can only have one CBIL loan, you can only have one BBL loan, and there's a system that they cross-check, so you can't try and approach 3 or 4 and try and grab lots and lots of loans.
Interesting. So if you are a sole trader, for instance, and you've been operating for less than a year, and you wouldn't have a record with HMRC potentially of the trade of your business, would that disqualify you from applying?
Okay, so assuming you have a bank account, so let's say I've been going for 7 months, I'm with HSBC, so I punch into HSBC because I operate with them, and my name comes up, Nachural Music. So they know who I am now, because they've told me they've got me on the system. I will know roughly that of 9 months I've done X amount. So 25% of 9 months. So I have to punch in my turnover. So I know I've done 100,000 in 9 months. Then it'll work out 25,000. Bang, off it goes. They'll do some checks, but the fact when I punched in, my name came up, well, naturally it means they've already got me on the system. So I'll do a few checks just to make sure we haven't defaulted or anything. Bang, and the money should come.
Okay, so if you are banking with one of the accredited banks and you have been trading for less than 12 months, you should still be able to get a loan.
Yeah. Because there's nothing, and of course, remember, you have 6 months from Monday. I think that's November, isn't it? Anytime between now and November, you can apply for this BBL. You don't have to do it today. As I said earlier on in my conversation, you could take it into, I don't know, the 5th month and say, right, I need the money now. Now I'll make the full use of the year. Not paying any interest at all.
Okay, thank you. We have an interesting comment here from Paula, who applied to Barclays this morning and it worked. The loan was approved very quickly. And the advice from her relationship manager was to use Chrome and not Safari. So if people are banking with Barclays and having difficulty, it sounds like maybe the browser can make a difference there.
And that sounds like a similar problem we had this morning.
Yes, we also had the same problem, actually. This is why we were late.
Same problem.
We were using Safari and it wasn't handling the technology. So it sounds like Chrome is much more effective for that. I'm sorry. So HSBC apparently, according to Graham, are taking applications from non-account holders.
Yes,
So that's something to note, everyone. Okay, interesting. Well, Gareth, yes, that's a specific question about CBILS because you have too much equity in your business property. I mean, if it's a CBILS loan over the £50,000 threshold, it's not really what we're covering here today, and the criteria are very different for each bank and each individual business. So it is something you're going to have to speak to your relationship manager about. And you know, it sounds like they are relatively complicated. The banks still are making decisions based on you know, the viability of the business in the long term.
I mean, interesting, David. I had a figure yesterday that £4 billion had been dispatched through CBILS, so it is starting to move quite nicely to CBILS. I think the banks have got their head around how to do this. Okay. But with the BBL, it's a lot easier, a lot easier.
I would imagine that a much greater volume will go out through BBL in a much shorter period of time. So you did speak to this earlier. The bounce back loans, they'll be available for how long? 6 months?
6 months.
6 months.
No, I think November sometime. Maybe November the 1st. Come on. If you just project 6 months up, you do have up to 6 months to apply for the BBL. I think the same with CBILS as well.
Okay. Jacqueline is asking, if you've had a business grant, can you apply for a bounce back loan as well?
Yes.
Yes. Yeah. Okay. If one lender refused you, are you able to apply to another bank?
So are we talking BBL?
I think BBL here, yeah.
That's interesting. Why would they reject you? That'd be interesting.
I'm not sure on that one, unfortunately.
Sorry. So have they been rejected, or are they presupposing and asking the question in the event?
It's not clear from this question. Let's assume they have been rejected.
Interesting. Well, if they've been rejected, and again, it depends if there's a central depository. So they've been rejected on a number of things. Maybe their turnover figure's wrong. If it's an existing bank, who knows the figure? Maybe they've asked beyond the 25%. Because beyond that, I'm trying to think of the little tick boxes. On what other grounds would have they been refused? There must be something there that I haven't quite understood, if that makes sense.
Yes, no, that's, I mean, it should be fairly, if the business is, you know, can show that it had turnover, you are self-certifying. So that's, we're not unfortunately able to, maybe you can call your relationship manager and try and get clarity on that, but we unfortunately don't have any further color there.
Yeah.
Hazem is asking, when you spoke initially, you said, you know, it's good for micro businesses, but the bounce back loans are not capped at companies with 9 or less employees.
No.
You can apply for one.
Anybody.
Any number of employees. So it's not just for companies with less than 1 employees. The criteria. Sorry.
Yeah, so I was going to say the only reason they sort of said that was because they were the ones that were struggling to get through CBILS. Yeah. And it's a quick route. We heard about quantitative easing. This is a quick way of getting the money into the system quickly into businesses for them to continue to operate, or at least hold on to their employees. So yeah, it's not listening to anybody. It's just the only reason I said micros is because they were the ones struggling with CBILS and didn't have the paperwork to get money for the CBILS.
Of course, and you know, it's a sort of bridging loan, as it were. Obviously, if you have more than 9 employees, 50,000 are probably likely not to go particularly far, unfortunately. So Graham is saying, surely the bank will look at your account activity to determine your turnover, so not opportunity to self-certify. I mean, the bank will look at your, they will have, if you're banking with your bank, if you're applying with your bank, clearly they will have access to your banking.
They will. And my guess then would be they'd move on it much quicker because they already know about you. And of course, remember the one criteria that's not been included, which was included in CBILS, is affordability. In other words, are you afford to pay it back? That's the question they're not asking. So
that's where the self-certification element comes in. They're assuming that you will be able to pay it back without querying it, whereas with the CBILS, they are querying that.
And that's only because probably, David, the amounts are so much bigger. And secondly, remember, they're not getting 100% guarantee. they're only getting 80%. So they're still putting 20% of their money at stake. So they're going to ask a lot more questions because they're likely. And remember, they've got to account to their investors, the people who put money into banks to keep them running. They have to account to them as to why they've had a huge number of defaults. So they're going to be as reticent to lend out to less favourable businesses as would have been the case in the past.
Of course, and ultimately, of course, the burden for these, these defaulting loans falls on the taxpayer.
And also, of course, they have to. So when somebody defaults, then, and this is one of the sort of moral questions, is somebody who's borrowed could turn around and sort of legally say, well, you shouldn't have given me the money because you knew actually I couldn't afford it. I'm talking about CBILS here. So you could get a counter. It's a bit like the credit card companies and the wongas of yesterday, who were lending money out to people knowing they couldn't pay them back. So there is that very delicate legal side. So banks have to be seen to have been going through the thorough due diligence process and checking affordability, so that that defense doesn't arise in court later, which is, well, actually, you as a bank knew I couldn't afford it. In this instance, you see, they'll turn and say, but you certified, we asked you at the end of these 2 forms, are you sure you want to do this? And are you sure the numbers are right? Well, you shouldn't have signed that off if you think you couldn't do it. So that's the self-certification route around the legal side.
And yeah, obviously that does, everyone who is applying for these loans, clearly they want to keep their businesses functioning, and their basic assumption is that we will return to normal at some stage.
Yeah.
And so obviously we're all hoping that that is the case. Although the lack of clarity makes it, of course, stressful time for all business owners. Yeah. Sympathetic with.
Well, look, these are unprecedented times. I mean, the fact that we're doing BBLs, who would have thought you could have a self-certification loan up to £50,000? Totally unheard of.
Of course. Peter's asking a question which you did speak to earlier, but whether you can apply now and say you don't want to receive the money straight away, say in 2 months' time.
I think once you apply digitally, so you go on, I think you're implying you want the money now.
Okay.
I think you have 2 recourses here. You either have a conversation with your relationship manager and say, look, I can see the money's there. Just to let you know, I don't need it now, but just to let you know, in 2-3 months' time, I might be in a position to take that. Other people have decided that they're not going to wait the full 6 months. They'd rather have the money today in the bank, knowing that if there's a problem tomorrow, they've got it. Those who are pessimistic and prudent might think, well, we know interest rates are not going up. And if you look at the credit card market, a lot of credit card providers are pulling out, because they can see that with a potential recession coming, some people are going to default on their credit cards. And so credit conditions may tighten. And some of the bigger boys, the FTSE companies, have drawn down their facilities in case, and remember, they've probably got those in place, but in case there's a credit crunch. And we've all been there when there was a credit crunch back in 2008. The interesting bit is the government is asking the banks not to tighten, but to loosen the purse. And that's when they felt the CBILS wasn't quite loosening enough, they introduced BBLs. So I think the government has decided that this is the only way we can get money out quickly. And I think the thinking is we will worry about the default after the event. Would rather not hold back, and in, I don't know, a year's time, it's too late.
Sure.
We've got a full recession. We'd rather take the risk now. So yeah, they're giving guarantees. Let's see what happens.
Yeah, so Peter, you can apply now, draw those funds down. If you don't spend them, you can pay them back in a year's time and pay no penalty whatsoever.
Correct.
So it makes sense to maybe try and get that money now, I would have thought, just in case. Phil is asking if you cannot get a BBL from Barclays because their site continues to have access problems, how long will it take before other lenders offer BBLs to non-customers? I mean, I think we did speak to this a bit. It sounds like HSBC might be offering non-customers.
NatWest are doing the same.
Well,
NatWest are doing the same.
It'll probably take a bit longer, though, I think, is the answer there, right?
Yeah. It's obviously they're going to look after their clients first. One, they know them. And secondly, they know their trading history. And thirdly, the infrastructure's in place to deal with the current customers. Once they get all them done, Then they'll take the new ones, and they will still do a bit of due diligence just to make sure you do exist, and HMRC and all the links. And once they've decided, yeah, that's fine, and then they'll give you the money. But you are going to be at the back of the queue without a shadow of a doubt.
Of course. Thanks, Ninder. Patrick here has got an interesting question. He's got a startup. It's been operational for just over a year. Spent 35,000 on capex through his private account. So I guess those are directors' loans. Now he has a business account with a digital bank, not a registered entity yet. Wondering what are his chances of getting a BBL?
Okay, well, I suppose the question is, we're not looking at expenditure here. We're looking at turnover. So whether the fact he spent 35, 40, 50K on capex is neither here nor there. It's his future cash flow projections, and how does he understand what that looks like if he hasn't already got some kind of idea of turnover. So I suppose we would start from, well, what have you done so far in terms of turnover? That will then allow you to project what you need and what your expenses are. And I don't know if capex means he's already spent it all, and therefore I don't know what his future expenditure looks like, revenue and capital. So I think he has to do the numbers. I spoke at the start, do your spreadsheets, work out your top line, work out your bottom line, look at your cash flows, look at which month you're going to have the crunch, and then decide, well, that crunch short term, is it better serviced by an overdraft? If it's only a very short term, you talked about the word bridging. If it's a much more long-term perspective, then take the loan out. And depending on how much you want to borrow will determine whether it's a BBL or a CBIL. But again, you need to work out what your projections look like, because the question does say, what is your turnover? And it's 25% of your turnover. So if your turnover is 10,000, you're only entitled to 2,500. It depends on your turnover.
And I think that really rolls nicely into the, thank you, Ninder, the question here from Jade and Graham, both of whom set up a business just before the crisis started.
Yeah.
So they only have, it's an early stage startup. They have projected turnover and cash flow, no trading figures whatsoever. And so they're not eligible because they have no trading record. Is that correct?
Yeah, it's 25% of your turnover or 50,000. So I think probably the rationale behind that is, well, you haven't really suffered because you haven't really got going. So, and remember, these loans have been brought in because people are suffering because of something unpredictable, something unforeseen. No business plan would have ever thought this was going to happen. So you can't even say to a business, well, you didn't do much of a risk assessment, did you, that you're in trouble? So in ordinary circumstances, you would have to explain to a lender why you are where you are, and whether that's poor sales, poor marketing, poor product, or just your workforce. But what we are where we are is because of the coronavirus, and all these products are linked to the coronavirus. So this is to help businesses out who normally wouldn't be in trouble, not the word normally wouldn't be in trouble, but are because of the coronavirus. And that's why the CBILS was quite difficult, because the criteria was only come to us if it's the coronavirus that's affected you. If you are in trouble already, so you were hemorrhaging cash well before the coronavirus, then actually your whole business model is flawed and we're throwing bad money after good. Convince us otherwise.
Yes, no, that's true indeed. Thank you, Ninder. So I think looking at some other questions here, Christina and Kate, we did speak to this earlier. So there is no restriction on the number of employees that are, for the bounce back loan. It can be over 10. That was just an example that Ninder was giving. And there are equally no restrictions on the type of business that can apply for this sort of loan.
So David, the word is turnover.
Turnover.
It's all about turnover. It's 25% of turnover, minimum 2,000, up to 50, but it's turnover, not number of employees, not size of company, not sector. It's turnover.
Indeed. Thank you. Rachel is making a good point here. Speaking to Jade and Graham's point, the startup loans are available still for businesses. So that is a route that you can look at. If you have a startup, you can still get startup loans up to, I believe the limit is 25,000. Yeah. So that look up startup loans on Google, and that is a potential route for a new stage business that is obviously not able to trade because of the current circumstances. So yeah, Ninder, I mean, it's a tricky situation for everyone. It's no one really knows when this is going to end. So obviously, people are almost a Hail Mary on the level for a lot of businesses, just sort of, hoping that the bridge loan or the CBILS loan will take us through to a trading period where things do resume some degree of normalcy. But it's not clear what that's going to be, and obviously we're all hopeful that there isn't a sort of second peak in the next winter and an increased disruption to trading activity. So it's a very difficult time for everyone, and we're very sympathetic to to the environment that everyone finds themselves in. And the only advice we can really give is to really keep your costs down to the maximum possible level, if possible. Really be very parsimonious where possible, and these loans are available. But as Ninder said at the very beginning, you are still liable for this. It is a loan.
I think that's a very good point, David. So look at all your costs, question all your assumptions, question every assumption you make when you put a cash flow together. Do I really need to spend this money? Do I need to spend this money? Think about your brand at the same time. If you cut too much, think about how you're investing in your brand. Make sure the brand is still there, survives when you go back. And as I said earlier, it's almost like having a startup mentality, but having a brand. So at least you've got a track record, so people will come to you. And do question every little item on your expenses and ask yourself, is this something I really do need to, that I do or don't need to do? And of course, there's a lot of variables we've never thought of before. Health and safety now takes a totally different perspective. Is there a cost attached to that? Have you included that in your cost? The extra health and safety with the PPE stuff. Look at utilities, look at your foreign exchange, look at everything you spend money on. And maybe if remote working has worked for you, maybe encourage that. That might bring some of your bills down in terms of property and rent. Make use of the CBILS, make use of the BBL, because what the government wants is we want to keep the economy ticking along. And we talk about a V shape or a U shape or a bathtub. In other words, how long will it take for the economy to shoot back up? I even heard the word trampoline, and those when you jump on a trampoline, you jump back up even higher. The government is interested in keeping the economy going, keeping society intact, keeping a cohesive society, avoid a recession. Well, we're going to get a recession, but avoid the duration of it. And quite frankly, they're throwing money at it so that what they spend now means they won't have to spend later in potentially greater quantities. But as business people, we should be questioning everything on our spreadsheet, every little bit, and asking, do we need to spend that? And secondly, think of the worst case scenario, do the projection up to a year. Think about another 6 months. And I said, I'm in the events sector. My proxy is Premiership football. And so far they're saying Premiership football, possibly the earliest is January, February. And another maybe 6 months, maybe the whole season disappears. If it's the whole season, have you got cash flow to keep you going? So don't think just about the next 6 months, because you asked the question, this could only take some business up to 3 months. Think 6, 9, 12, 18 months. And if it picks up quicker than that, return the money back, pay the money back, and you're fine. But this is unprecedented times. And I would never thought in my life would I ever see a loan at 2.5% for 6 years, first year holiday, and no admin fees. And you know something, we may be reluctant to take on debt, but the alternative is liquidation. And nobody wants to see companies liquidate. Nobody wants to see people unemployed. And nobody wants to see people unemployed for a sustained period of time. Because once you get into a recession, it could get into a depression. And you know something, people go through an entire life never working. And that's something society can't afford. So I can see the logic of what the government's done. And I think the government's done a great job in getting money into the marketplace quick. We as entrepreneurs have got to be just as nimble, just as visionary, and just as long-term thinking, as well as accepting the short-term, these are the steps we have to take.
Of course. Ninder, I don't know if you have another few more minutes. We do just have a couple of other questions that have trickled through that I'd like to try and tackle if possible. Key is asking if they have 2 limited companies under one parent company, can you apply for 2 BBLs? I don't see why not.
Yeah, so if you've got 2 or 3 separate companies with their own separate company number, all operating separately for HMRC, so company A Limited, B Limited, C Limited, that's 3 separate entities, assuming they all have turnover, assuming you can take 25%, yes, you can. If you only have one bank account with a number of income streams going in, that's that one bank account, that's that one company. You can only apply 25% of that one company, because that is in law, legally, one entity. So that's my answer to that question. Depends on if it incorporated a company's houses separately with HMRC separately and with separate bank accounts.
Thank you for that, Ninder. And then one final question here from Graham, who is banking with Metro Bank, who is not currently part of the B Bounce Back loan program yet, but they are doing CBILS loans, and wondering where he goes in this instance. Does it make sense to move banks or open a second bank account at an approved lender? Can you speak to that at all?
A couple of things. So Metro have a unique offering. One of the reasons they get the type of clients they get is the way they operate. Later our openings, I think some of them are even 7 days a week. So I suppose the first question I would ask is, why did you go to Metro versus one of the other main lenders? There must have been a reason. Is that reason good enough for you to wait and wait for them to do BBL? And if it wasn't, and you need a BBL, then I think you're going to have to go very quickly to a main clearing bank, because you can't wait, and say, yeah, I do my day-to-day with Metro, but can we do something here? 2 things: you'll be the back of the queue, and secondly, they will do more due diligence than if you were a customer of theirs. So it's always back to the same question: why did you go to Metro? What is it about Metro that you'd like to stay there? Maybe you have existing loans or something. No idea, so I don't know. But yeah, if you need the money and Metro can't do it, I would go to one of the major clearing banks, explain that you're with them, but that you can't get access to them, and I'm sure they'll listen.
Great. Well, Ninder, I have to say it's been a wonderful session this morning, incredibly informative, and pleasure to have you on the show. Really, thank you very much for taking the time to join us this morning and give everyone a bit of insight into what is happening with this newly announced scheme. And hopefully that's given everyone a bit. I see a lot of messages of thanks in the comments here, people saying that it was incredibly useful to get the information, and it's given them a much greater understanding of what this product actually is. So yeah, very, very pleased to have you on. It's been a pleasure.
And thank you for both your fantastic IT skills and your great questioning. Very well done. Thank you very much, David. And listen, anybody wants it, they can catch me on LinkedIn, on Facebook, Instagram, and Twitter. So if anybody's still got a problem or a question, I'm more than happy to help them out. That's really kind. And I hope everyone stays safe, and good luck. And we're pulling for everyone and hoping that this ends soon. Thank you. Okay. Take care, everyone. Bye-bye. Bye now.